Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 9 o'clock in the morning, East Coast time, June 25th, 2020. For economic news here on Thursday. This morning we had core durable goods orders. Let me actually reload this, look at the latest numbers because they did come out. Durable goods orders were a beat. The final GDP came in quarter over quarter minus 5%. Unemployment claims minus 1,480,000 against an expected 1.32. And then we had goods trades balance, which was a miss. Final GDP price index will be, well, I guess it should already, never mind, it's already out. And then at 10:30, natural gas storage, and then bank stress test results are going to be 4:30. The market will be closed. Tomorrow morning, we have CPE numbers, personal spending, and personal income, as well as University of Michigan consumer sentiment. Those core price index numbers can affect the precious metals. So I did title this video Next Market Drop or NASDAQ Pop. And I want to go over the NASDAQ just to start. This is our most bullish index. We like to joke that it only goes lower to go higher. And I want to talk about a couple of setups. One of them specifically, I don't know if we get, but if we do, it's a highly favorable setup. So I've thrown it in the laser setups here for the Startup Trading chat room this morning. And that is just a full 50% retracement from the swing low of last Monday, June 15th to high. Now that level is in 98.34. It's a 98.34, and maybe it comes into play today, tomorrow, possibly next week, but it's definitely a level of interest we'd want to pay attention to. Now, there is support levels that are in front of it, and we are currently inside of those extensions. Now, we've dipped in quite a bit here, and we have this high from 96.24 to high that's traded once to target. It hit that target last Friday. That same anchor new high traded into its 50% retracement on the Sunday night open and then completed its target at 10,227 on Tuesday. That same anchor new high, we came out of those profit targets. We've rotated down into that 99.60 half. So that is the current setup we are in for the long series for the NASDAQ, but I would love to see us just check a little lower into that 98.35. Now that's a full 50% retracement for me, but if you watched Perry's video from this morning, from Startup Trading, which I recommend all of you guys do, incredible value area insight and profile look at the market, just a little different way I look at the market, but when things line up, they really begin to look good. And he has a big profile level at that 98.35, and you can just see this is a previous high from Friday going back to the 12th. It's a low area from Tuesday. So it's almost too good to be true of a support level. But if we can trade that level today, it would be a very interesting level for a long setup. Now, the other situation we have, if we can confirm this support, and in Perry's video, we get really bullish above this 10,159 level, but we are inside of what is an extension short from 10,106 to low. Now, this has gone completely sideways. We've technically pierced the 61, and there's been an initial bid from this halfway back long. So I'm going to continue to watch what we do if we continue to stay bid above these levels, or if we continue to stay below that overnight low. If we stay below that overnight low in some shape or form here this morning, that's going to lead us down to those lower targets at support level. So I'm just going to stay patient here with this NASDAQ. If we start breaking above the 1040, I will have to reevaluate how aggressive I want to be to the long side. But right now at this point in time, this 98.35 zone is a hot spot for me. I'm going to go back to the S&P 500, and we'll talk about yesterday's action. Yesterday, one of the biggest notes I was making in the trade room is just to kind of avoid the longs in the morning. We did have a pretty heavy breakdown, and really one of the most interesting notes, and I'm actually going to make a video of this for the masterclass, we had this 50% retracement out of highs in the overnight session on Tuesday. We completed a negative 61. When you have a halfway back short that completes a negative 61 within a few hours, it's usually at least a short-term trend reversal. And then going into the open, that 31.28 to low held its 50% retracement, and we completed in the first hour of the morning. Once we completed that targets, which was pretty quick, as soon as we turned into the 945, we retested and then just went straight down. This was the next measured move, and it was that swing high to low. Now, typically when we have a next measured move like that, we will often rally up into what is the 50% retracement. But I had seen the front run of the 38.2, and when you front run a 38.2 in a traditional sequence, is a rare situation. You typically have some pretty aggressive selling, and we went all the way down. And my support level was this 3,000 level. Now, because we actually never traded this traditional, what ended up happening, and towards the end of the day, the trade that I had given out in the room was a 30.50 quarter short entry. Now that was on a first test. We had that 30.50 quarter. The profit target was 3,005 quarter. Well, our lows are 3,005. So that is technicals on the low, on the nose for the ES. Once you complete that profit target, you have a same anchor new low sequence. So I'm leaning on the bearish side here today. We bulls still need to prove themselves. We came up, we traded that 61.8. We've come out of those resistance levels. We've sold into 150% retracement short, and we've sold into 250% retracement shorts here. Those halfway back downside targets are 30.10, but right now I am bearish below this. I'm just going to go out there and say bearish below the overnight session right now, but I do have support levels. If we get below this 3,000 zone, this is where I was looking or hoping we'd get to yesterday. This 3,000 zone is a 38% retracement of a daily support level. It's also a daily leg start. It's near our Sunday night gap down going back to the 15th and the 14th. So I don't think we're going to close below 3,000, but I do think there's a possibility that we get through these targets. Now, if we were to, get a super aggressive sell-off here today and get all the way down to this negative 61, anywhere below 29.63 would, I think, lead to a pretty powerful reversal if we could get that by 1 o'clock. So if we get down to this area by 1 o'clock, I would be expecting a pretty powerful reversal into the close. So these markets are a little more interesting here today than they have been for those potential setups, and I'll comment on them in the room as they happen. Moving on to the Dow, we have the extension short from what is 25,674 to low. Now this completed just like the S&P. You can actually see the overnight high is a retest of that 50% retracement. So I'm going to watch this same anchor low. The 61.8 also lines up with that. I still want to stay and remain bearish below the overnight highs. We can still, the momentum right now is down. Now the downside target here is a 24,845. Now I have what is these white dots. Oops, let me delete that. These white dots here are what I call leg starts, right? They're just the beginning of a 3-bar move. Well, this hourly leg start from Monday of the 15th lines up perfectly with this profit target. So the Dow's support zone that I'm looking at would be a reversal point at this profit target. So reversal point at this profit target, 24,845. So my overall view in the index is a move lower first into the support levels here that I've mentioned, and then move higher up from there. All right, moving on to oil, which like the other markets, we did have a pretty fantastic move lower. Oil was off over 6% at one point in time. Now, what I'm looking for here in oil, we have come into, I believe, the full 50% retracement once again from that June 15th low to high. Now, we have technically pierced the 61. So that is a failure for the oil market. Now, when you have a failure of a long setup, you have the possibility of rallying, especially when we just go a tick in all the way into the full 50% retracement short. And although we had oil inventories yesterday, we have natural gas inventories here today. And if we could get all the way up into this 39.36, that lines up perfectly with where the market snapped post oil inventories yesterday and right on that bar. So that 39.36 zone is going to be very important for me here in oil. I believe there was, I got to check, there is an extension here in oil that we could continue going straight down. 39.43 to low has traded, and everything here, this was just be a bearish retest of the 38.37. So I'm watching 38.37 and 39.36 with support levels near 36.03 would be the first thing I would anticipate. So those are the levels I'm watching here for oil. Moving on to the USDJPY, which is broken out of the top side of the range. We have some pretty big reversals out of what was Tuesday. We had a massive move lower. we caught into the bottom of the range. And I just want to actually show you guys what this level was here on the USDJPY on a daily chart. It was a full 50% retracement long for the year retest. Anytime we come into big, you could even consider that a weekly level. Anytime you come into these levels that are from the higher time frame, it's important to watch what we do after them. Now, what we sold off from was the 50% retracement short for the year retest, and that goes back to the 5th of June. The 5th of June, we started selling off aggressively all the way to the what? Halfway back for the year. So this is a big battle here between 109.30 and 106.40. Those are how big those levels are apart. Now, since we've come out of that low, we've actually begun an extension series, and that's what I'm paying attention to here. The anchor is a 106.63, and I'm looking at the 50% retracement support level. There's a possibility we do rally from the 38.2, so the 107.13 will be a support level, and then the 107.03 is the 50. The 50 lines up with the swing low from 3 a.m., the European session, as well as a leg start from the Asian session, and the 38.2 lines up with the 4-hour leg start lower, and that's at a 107.13. So the 107.13 and 107.03 are my two support levels, and above us, if we do trade higher before trading either of those levels, I have a 107.53 resistance zone. Okay, 107.53 would be that resistance, and that is a same anchor new low extension, and also the previous highs from the prior week. Moving on to the Aussie dollar, which is back at the bottom of the range here. We've been moving into the bottom of the range, the top of the range, and we're getting these out of the top of the range. There was this sloppy halfway back short, which dipped into its 61, and we'll have to see what happens here. But if we end up taking out the overnight highs, and then we just have once again another sloppy low, we'll see what happens. But right now we'd have to complete above and then maybe look for a long, but it's just we're at the bottom of the range here. I favor longs because of that, and you just have to play the range here. There's nothing in the middle. I'm not interested in a halfway back short here right now, just because it just has not, well, it has acted as resistance, but it hasn't really held. So I'm being a little more cautious in the Aussie dollar. I don't have anything I like too much there. The euro, a lot of action here. So we've come out of a test of the bottom of a pretty big range, and I want to talk about two different possible sequences and which one I favor. Now, if you look at what was the highs going back to Tuesday, we came out of those highs and we really had a pretty aggressive short setup that was at 7 a.m. on Wednesday. Now that's gone totally through our targets, totally through a -23, totally through a -61, and in fact we did have an extension trade to its profit target in the overnight session. So there's the possibility of the same anchor new low. The 50% retracement is at a 112.29. Okay, so we have that level as resistance, and then also what would just be the next traditional from the 113.10s to lows. I really like the 113.10s to low traditional. That is at a 112.50. So if we were to just look at these two resistance levels, the 112.29 and the 112.50, and then go to the daily chart, you can actually see that the 112.50, it lines up with the lows of what is the prior day, and it just seems like more of like a visual resistance level. But both of those levels I think will be tradable here, and the euro is actually pretty technical to the downside. The only concern on the more aggressive extension is that is going to trade after we've come into the bottom of the range, but it does have a little bit of a nice visualization. I think it'd be worth a free trade using a 5-minute ATR. Moving on to the GBPUSD, we've been front run on our next 50% retracement short. I am just waiting for this 124.72, lines up with the areas we broke down from. Nothing to do outside of that. If we do get to the bottom of the range here, I honestly wouldn't even be interested unless we got all the way through the lows for a reversal. I think it's possible we got through the lows before we saw anything major for a reversal. There is, let me go out here to the daily chart. There is, I know, a bigger halfway back here. Let's see. That's quite a ways away. I don't even need to go over that right now. Just focus on what's in play. So yeah, either checking up into the 124.72. Otherwise, I do think it's possible we just continue aggressively lower here. And then the USD CAD top of the range here, we've run into a 4-hour swing high. That's that solid red line, and a 4-hour leg start. These are these two resistance levels. Now, there's a traditional, if this traditional breaks, okay, if we break through 135.95, I would look for the first short, but right now it's bullish above, no touch 135.95. There's nothing to do unless we break lower or complete. Nothing to do in the CAD. Gold is an interesting one. Now, had a couple of setups, and this is moving into, and I do want to highlight because where are we in gold? We had a failed breakout of the 2020 high yesterday. Now, we broke above. There was a potential extension setup. It was pretty aggressive, but then we fell back and we didn't really hold it. But this double bottom here is pretty interesting to me. It comes from the smaller time frame chart, and where it comes from, and I have a couple of bigger levels here. I'm just going to mark out first. First, let me go to an hourly chart. Just on the higher time frame, if we do pull back, the full 50% retracement from the June lows is a 1734. That's pretty far below where we're currently trading, but we're going to want to know that that level's there. So I'm just going to come in here and change this style up, make it blue. All right. And then the full 50% retracement from what is the 15th. Man, I feel like every time I do technical analysis, I'm quoting the 15th. That was such an important day. But that 15th low to high, that's a 1751.2. So I'm just going to go in here, duplicate this drawing, come up to 1751.2. Edit. Boom, boom, boom. Been doing this a while. All right, so those are your two higher time frame support levels. But what's holding here and what's interesting to me is, let's go down to a 30-minute chart. There is this extension that's been in place since Friday, and it's a 1742.6 to high. Now, we traded it once, and then you could argue that this is what we had held on Tuesday and Thursday. This same anchor new high, actually, you know what? It is, I'm messing up, but my anchor is 1733. The 1733 anchor held here, 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 and then this is what we've stuck it twice. Now, until we validate this support by breaking above the 61.8, 1784, there's nothing to do. I gotta let somebody in, but I'll catch you guys in the room, and we'll go over silver.